The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 14th. Terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. If you can't dial in, let those fingers do the walking. You can send me an email. Steve at TFNN.com. Inside the subject heading, please put radio show question. And inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 113 points, 25,301 is a print. S&P's up 17 points at 2839. NASDAQ up 42. Russell up 17. Semis are up 2 points. Trannies are up 121 bucks. That's a a little over 1% to the upside. Spot volatility index straight out at 1342. 1331 is the key number out there. We'll be watching for that at the end of the trading session today. Gold is up 60 cents, no big deal. Silver up 2 pennies. Light sweet crude is flat. Leading the charts, the upside, AutoZone, 33 bucks. That's 4.5%. Amazon up 21. Advanced Auto Parts up 11. O'Reilly Automotive up 9.40. We've got a request to take a look at O'Reilly from Peak D in the Den. We'll do that in a moment. Why? That's the question I'm asking. Why Inc. is down 14 bucks or 16%. Booking Holdings off 10 bucks. Netty's off 8. Optinose. Yeah, I think that's exactly how you say it. Down 26% or 5 bucks out there. And Huya, H-U-Y-A, off nearly 5 bucks or 14%. The first question that came in is if we could go take a look at Home Depot. And the question reads like this. Let's see. It says, please assess Home Depot. Traded 200 high at 8 a.m. Into the open, then sold to 192. What does selling on great results tell us, if anything? Well, let's just take a look at Home Depot, the Home Depot chart. Right now, trading at 193.60. The chart I'm going to put over here, it's got about a 1.5, 2-minute delay on it. My Ninja Trader chart, just simply because I have so many other calculations going on right now. But here's what we know about Home Depot, just simply the stock pattern. The same pattern that it formed down at the bottom back here in April, utilizing one of those Rhodes momentum indicator signals, the same pattern that formed up here at the top. Now, we can see that price is below Stevie's red line, green line at this stage. Green means that the price oscillator is above zero. So we have a falling price oscillator above zero. Says retracement. So it wasn't able to, say, 198. Stevie's red line, green line, 197.31. So we know that that is a resistance level out here. The 198.69 area, so you got two resistance levels. You got Stevie's line, and then you have the top of the daily market profile, 198.69. So that is your resistance. It close above that, says, okay, I want to get all the way back to that Tom DeMark green dash line out there, and that's from the trading high. Not saying it's going to do it, but this is the candle session here. That would be another level of resistance. That would be the July 25th high. As far as what that price is, it is 202.29. Now, there's a hammer candle, so this is the beauty here. We've got a swing point that's being tested. We'll go over to the volume charts in a moment and see if there's an A to B equals CD to the downside. But there are two things It's really one thing that we know 2 times about Home Depot and when it trades down into this 192 level. And that is that buyers believe there is very good value in this equity at the 192-ish area. How do you know that? How do I know that? How do we know that? We know that because you had a hammer candle that formed back here on July 2nd, right at that area. You had a secondary hammer candle form right at that area on August the 2nd. We can see that prices come down into Stevie's red dash line. That's a Tom DeMark setup trend line. And closing below that, as it did just by a tad yesterday, says, hey, I want lower price. But here is where the real struggle, the real fight between the bulls and the bears are. Since we know where the bulls are at out here, we know it closed below the bottom of a hammer candle. You and I like to say, hey, if you're long, you're wrong. And that's what we would say about Home Depot from a directional standpoint. So here is the price point to be watching. Will we use the hammer candle? Let's see what kind of colored line we can use out here. Yellow. Let's go with the yellow line. That's going to be at the trading low of July 2nd. That, by the way, that low did volume on that trading session of 3.8 million. You've already done 8 million. So what this tells me, you've got 8 million shares that have traded going into the bottom of a bullish hammer candle out there. And it's saying, no way, Jose. So here's where the real fight is. And if, in fact, price closes over 192.12, even though it's going down into a swing point, let alone it's a hammer candle out there, you've got another then that tells you that bulls really are trying to defend this. Market profiles are not with regard to the daily time frame. If price is able to close below 192.12, then the A to B equals CD pattern. It's a slightly different one. This one would look like this. I would start with the high from the trade day of July 24th. My B point would be that other hammer candle on August 2nd, and then my C point would be out here on August 9th. That would give you the Gartley buy pattern setups, which would take it to either 189.04, 186.13, 182.43. That's what this would be telling you and I. Is it telling us something else about the markets? I can't make that correlation. We'd have to go and really take a look at the correlation, I suppose, between Home Depot and other instruments out here. If we look at the weekly and the monthly time frame charts with regard to their market profiles, price is well above those levels, respectively 182.04 and 169.59. So at this stage here, hey, what price was trading up to this morning, that was just simply trading into logical areas of resistance, meaning the top of the daily profile and Stevie's, I don't have the intraday chart out here, or the extended hours chart, but we can see where Stevie's red/green line is out there. So hopefully that assists you with regard to at least what I see taking place inside of Home Depot. The next question was O'Reilly Automotive, O-R-L-Y, I believe, is the ticker symbol. We're not going to have a chance to complete this one before we go into our breakout there, but we can see that right now this thing is breaking out to the upside. It is above a brand new, when I say brand new, I mean not brand spanking new. I mean this formed yesterday, brand new profile that formed yesterday. Slightly bullish in structure. Ain't no bulls in O'Reilly Automotive as this is trading out at 324.23. Above the daily, above the weekly, above the monthly top of the box out there. We get back from this break. Let's go see if there's anything else that Stevie can see about ticker symbol O-R-L-Y. I want to hear from you too. Give us a call. Send me an email, steve@tfnn.com, 877-927-6640. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Pete T in the Tiger's Den was asking about O'Reilly Automotive, ticker symbol ORLY. You know, Pete, when we take a look at it, we can see again that brand new profile that formed yesterday. That's on the daily time frame out here. If we turn off price just for a moment, what we'll see is that it's just slightly bearish in nature, slightly bearish because the center of the box closer to the top than to the bottom. And really what it means is that the 321.01 level, day's not over, but that really should have acted as resistance. You can see we've cleared that. Volume behind the move is, you know, it's nothing special necessarily. 359,000 shares. You know, days with big volume in this thing look like they're about 1.5 million. But volume, schmolium. Price has taken out a level of resistance, and that says, in your question was buy, hold, or sell, something like that, I believe, right? It was, what was it here? Buy, sell, or hold. Well, I don't know that. I mean, if you're a momentum trader and you want to buy the breakout, then you have all the signals that you wanted to. With regard to sell, I would not sell this. Why would you sell this? There's no signal here to suggest selling. Not on this, at least, set of charts. If I take a look at the daily time frame chart out here, price is above Stevie's red line, green line, 318.89. So that would be a level of that's a bullish level of support that price has overcome. You are potentially, not potentially, you're on a daily basis, you are in wave number 7, letter number G out there. Potentially is what you are in. Actually looks like, you know, you could use one of those Basil Chapman instant restarts. That would say maybe you're not really in the 7th wave or letter G, and you'd really be starting right there. You're only in that 3rd wave. Let's face it, not all 7th wave patterns fail out here. So is there anything here? We've got a rising price oscillator above zero inside of O'Reilly Automotive. Let's just switch over, take a look at the weekly time frame. And on the weekly time frame, Pete, what we are looking at is we're looking at what clearly looks to me like an A to B equals CD to the upside. Is that what it looks like to you as well? So let's go measure that. Let's go take a look at that A to B equals CD pattern. We're starting down here in July. Well, I'll get my crosshair out here and I can give you the actual dates for those of you home gamers that are trying to do the same pattern. The July 14th is your A point. Your B point out here is January 26th. Your retracement, which was a 56% retracement, is April 20th. The one-to-one move out here peak is 327.40. I don't know if you're in this, but would I get out at 327.40? You're at 324.18. Not a chance in anywhere. Why? Because this is very likely going to be more than a 1-to-1 A to B equals CD at the upside. How do we know that? Well, we know a couple of things. One, it did less than a 0.618 retracement. Two, this leg here off of the C point. Notice the bar, the wide-ranging bar, weekly bar off of that C point. That right there alone tells you that this is going to do more than a 1-to-1 A to B equals CD. How you come off of that trampoline is everything. Well, it's not the only thing, and therefore it can't be everything, but it's a big thing out there. Secondly, look at how strong this move is. We're using the exact same angle. The angle of the line for the A to B is exactly the same in C to D. And we are well inside. We are on the left side. We are on the strong side of the bullish side of a move out there. That says, hey, I'm not going to do your 1-to-1 A to B equals CD pattern out there. Not a chance. And price is moving higher and doing with energy. So what's Stevie's longer-term, intermediate-term call on O'Reilly Automotive? I'd have to say right now 357.30 out there. I hope that helps you out. Do not sell. Don't sell that sucker. Please. That is not a sucker. It's a pretty darn good thing. We got a question out here from Top Dog. Top Dog wants to know, is there anything we see in Ali Ba? He's looking for a bottom. You looking for a bottom out there? So we got these charts up on the screen. Let me go over and change my other software to Alibaba as well. Wouldn't it be nice if they all just kind of connected to each other? They don't. So if we take a look at what Alibaba is doing on the daily, well, let's do this here real quickly. Daily below, brand new profile that formed today. So this is Top Dog. That's not good. Yeah, that's just not bullish. You're definitely below a level of support. Weekly says, well, wait a minute out here. Bottom of my bullish structured box is priced at 173.20 or 172.81. So what we're watching for is it's a weekly chart. It's only Tuesday. Is price going to hold or is price going to close below that level? Now, we can see that, in essence, Alibaba has been consolidating. It has pretty much been consolidating since December 2017. It's now August 2018 out here. And the consolidation range is pretty much between about 168 at the bottom and around 206 at the top out here. So do we see a bottom? We don't see a bottom, not on the daily time frame chart, right? You'd first see a bottom, you'd think, on a daily time frame chart. Let's go do our wave counts here on the way down. Actually, I think I probably have to start right up here. No, well, I don't know. We can start it wherever we want to. But now you don't get that. You don't get a... so really where we ought to start this here is off this retracement bar. So you're only in leg 6 out here. Yeah, this has got a... how come I don't have an A to B equals CD on this chart? What the Sam heck happened there? We got to go add that in. How can that not be there? That doesn't make sense. Somebody must have left it off. Who could that be? Oh, there we go. It's back up. So here's the A to B equals CD pattern inside of Alibaba. So let's go see where... Please, come on, give me a break here. There we go. Okay, so Top Dog, we've got the 1-to-1 inside of Alibaba on a daily chart. Takes you down to 168.29. We are trading right now. We haven't gotten down that low. Again, that's the 1-to-1. Doesn't mean price has to stop there. So at this stage, I do not see a bottom. Continue to keep looking, at it as well, but I just don't see it. The reason why I say continue to look at it is because you're down towards the weekly and the monthly bottom of its box out here. So that's what I see in taking a look at Alibaba. Today is not that day. Jim says, Great Panther, GPL, is that it? Is in a free fall. It wasn't really a question for me, but, if you guys are looking at something, or gals, I like to look at it as well, GPL. So let's go take a look at Great Panther. Trading down at 97 cents out there. Does that mean anything? It's interesting. We take a look at this, Jim. if we look at the last time, looks like what Great Panther is doing is coming back to a breakout area, right? So here's one breakout candle. Just simply, you don't need volume. You can just look at the candle formation out here and look at the wide-ranging bar from the trading month. This is the monthly chart of April in 2016, right around 86 cents out there. But, you know, is it there? Or did the real breakout really begin right here in the trading of January 2016? So the real breakout is about 41 cents out here. So what it looks like to me is that what Great Panther is doing is just simply coming back to its breakout area. Monthly chart may not be the best to identify where that level is. At some point in time, we think, of course, I've been thinking this for the last 6 years, but at some point in time, Great Panther is likely to get all the way up to that 504 level because it does have a high volume high out there. So at some point in time. Now, that may not be for another 5 or 6 years, but at some point in time, it is likely to happen. That is Great Panther Silver. As Jim said, it is free falling, which is really not a bad tune out there, right? But the tune's not called free falling, is it? What is the name of that tune? Name that tune in 2 notes. 15 seconds. I can't. Steve Rhodes with TFNN. Dow's up 107. Yes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we've got a question here coming in from John in New York. And John asked a series of questions out here. And we'll do the best that we can to provide John with the best information. So John writes and says, at what price would you buy more VWO? No, VWO is the Vanguard FTSE Emerging Markets ETF out there. So the first question is, at what price would you buy more VWO? Now, if John were on the line with me, I would ask him, why is he only focused on the VWO? Is this because of you've got a market portfolio and foreign equities are a portion of that? Is it because you're listening to garbage? I'm sorry, I didn't mean to say that. Are you listening to guys on television that say, hey, now's the time to buy emerging markets for whatever the reasons are that they're coming up with? You know, what's the reason out here? And I said, but you've asked at what price? I wouldn't do it until I saw a bottoming pattern. That's for sure. I don't believe in buying low, because buying low means you could be buying it all the way down, right? You want to try to find some type of bottoming pattern. But the reason why I first bring up the question, why are you only focused there? If we take a look at Stevie's Bob system that tells us, so to the extent that you want to invest in foreign equities out there, here's a series of ETFs, about 20 of them or so, and it's got everything from, well, let's just do it in order here: Australia, Brazil, Canada, China, France, Germany, Hong Kong, India, Israel, Italy, Japan, Mexico, Poland, Russia, Saudi Arabia, Singapore, South Africa, South Korea, Spain, Switzerland, Taiwan, Turkey, United Kingdom. We could add a few more in there, but I kind of covered the globe here. And so the first thing is, in taking a look, so Stevie understands exactly what's going on around the world out here. And you do now, too, when you take a look at Bob. Bob stands for bullish or bearish. Now, I could take a look at the daily time frame and go ahead and sort this and look at the signals out here. You have three signals that are in a strong bullish mode on a daily basis: Brazil, Canada, Israel. I'm not telling you to go invest in those three, but they're a lot better than what we were just looking at there, the EWO. I can tell you that for sure. That's on the daily. Look at all of the bull over moves or breakdown bear moves, meaning you're trading below Stevie's red line and below the bottom of the TAS market profile out there. So that's for sure. If you look at the weekly time frame charts, again, I don't know your time frame, so you've got to, first you're saying at what price. I can't give you a price because we have to wait to see the bottom come in. But I guess what I'm really hinting at is you should be looking at more than just, when people talk about EM, emerging markets, as, you know, having been trashed, so you should buy them now because maybe they're of good value or something like that. Bah, humbug, baloney. You got to try to identify when price comes back to some type of pattern. Maybe it's a seventh wave move. Maybe it's Stevie Rhodes momentum indicator signal, such as the ones that are out here, where it shows you daily, weekly, and monthly signals out there. So look elsewhere. Here's the other thing with regard to your question with regard to, so, and then I'd say, if you don't have to buy, if you're not in a portfolio, but you're buying the foreign markets because what you hear on the boob tube out there is that, you know, things have been moving lower, and therefore, you know, it's a good buy. I say goodbye to a lot of your cash out there. That's what it's what the charts say. It's not what I say. It doesn't matter what I say. It's what are the charts telling us. If we take a look at the foreign equities out here and take a look at the many indices, well, this do it. Maybe this will do it right here. Here. Take a look at this with me, John. The upper left-hand corner is the Dow, and then going from the upper left, you know, you've got the Dow to the right. You've got the Dow. Then you've got the United Kingdom ETF. You've got the Australian ETF. You've got then Canada. You've got China. You've got India. You've got Germany. You've got Japan. You've got Turkey out here. Turkey jerky. Okay, so take a look at all of these and just use simple trend lines out there, and the only ones that have broken through descending trend lines out here are and the Dow is the weakest of our indices. So I'm using the weakest possible link. If I put the S&P out here, it looks way better. If I put the NASDAQ out here, it looks even better, you know, but I'm just put the Dow out here. So I put the big horse. Don't be buying these other countries. They're all tanking, so to speak. When I say tanking, I'm just really referring to a direction. Don't do it. It's not necessary. I know what everybody is saying on the boob tube out here with regard to, you know, the U.S. market and values and this and that. Are these folks not even looking at just simple trend lines out here to understand what's going on around the globe? So if you don't have to go into those other areas, if you do, then go take a look at some of these that show at least some bullish patterns out here for you to consider, whether it's on the daily time frame, whether it is on the monthly time frame. Hey, maybe it's a long term. So what do you have? You've got Switzerland, India, Russia, Taiwan, Australia, Saudi Arabia, even the United Kingdom to consider. Those are in some consolidating bullish modes out there, trading in between market profile levels. Even South Korea or China could possibly, but this is long term. I'd rather you're looking for a buy. I'd rather you be looking at what's going on the daily time frame charts in order to be able to do some kind of a flip out there. But this is more important, is to understand the global, what's going on globally out there. And the U.S. is still the best place to put your cash-a-rooney. One thing is relatively clear, should be clear to all of us, and that is that with regard to some of these emerging markets, which are going to continue or should continue, doesn't have to, but should continue to be in trouble with regard to a strong U.S. dollar, well, the U.S. dollar index is strong and isn't going to get any weaker. It's going to continue to move higher out here. This thing isn't topping out anytime soon. So this is going to even continue to move higher out there. So what people are doing with their cash around the world, what the big money is doing with their cash around the world, is they are investing it in the U.S. The U.S. where? The U.S. stock indices, the U.S. dollar, and bonds. That's where the money is pouring into. It's not pouring, for the most part, it's not pouring into anything else. So go with the flow of the cash out there, John.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So I don't know what was heard, what wasn't heard. So I just want to just start over and summarize for John, who was kind enough to write in and ask me, where would I consider buying VWO, which is a Vanguard ETF for emerging markets out there. Where would I buy silver bullion at a price per ounce? And this is what the point that I want to be able to make to you, John. And that is, first, we're taking a look at this chart. You're taking a look at the Dow in the upper left-hand corner compared to, in essence, worldwide indices. You're going to see other than India, you're going to see breakdowns out there. And so I'm suggesting that what you do is you look to the U.S. markets, not to emerging markets, to invest. If you just simply have to go into emerging markets, then tune back in tomorrow. Tomorrow morning. I'm going to do Larry's show. We'll probably replay it at 1 o'clock. Just depends on my schedule. But I'll do Larry's show tomorrow on Wednesday and tomorrow on Thursday, so from 9 to 10. That way we can actually take a look at the futures markets and see what's going on there. Second, with regard, because money's flowing into the U.S. markets. Secondly, with regard to where money is flowing out here, the U.S. dollar index is going to continue to get stronger. If we take a look at currencies, now this takes a look at the U.S. dollar index in the upper left, and then you've got the loonie, the Canadian, you've got the yen, you've got everything out here. You've got the Chinese currency, you've got the euro, you've got the pound. And then the bottom panel shows us the DAX, the Shanghai, and the Dow again. Where do you see the breakouts? This is just simple trend line stuff. This is not anything that you need. You don't need to be a technician, so to speak. You just have to draw lines, stick figures. Even I was able to do that. So you can do that too, and just use simple trend line analysis. The only thing breaking out is the U.S. dollar index. The yen just slightly, but that's now pulling back, and so we'll see where that goes. The U.S. dollar index is going to continue to get stronger out there. So you have to just assess what's that going to do to the emerging markets that you might want to invest in out there. Something to think about. What's it going to do to gold? That's another story. Or silver. You're asking about silver rounds. Go buy silver rounds. I'm assuming you are not buying those to trade because you pay way too much of a premium versus going and buying the SLV or something along those lines. Has silver bottomed? I don't see a signal just yet. But just simply continue to average into. I'm assuming you want to buy rounds because you want to have a physical metal that has been traded worldwide forever. Versus dollars. But the U.S. dollar index is going to get stronger. It's not going away anytime soon out there as a source to be able to use for cash and exchange goods and things along those sides. So buy all the silver rounds you want. Just average into them. Don't worry about really trying to buy a bottom because you should be buying them over the long haul if that's what your angle is out there. So, folks, again, tomorrow I'll be doing the live show, not that, the live show from 9 to 10, Larry Pesavento's show out there. And if I didn't answer your question because we were off the air, please write back to me. I'll make sure that I address it tomorrow as well. So have a great day. Stay tuned. Your favorite polar bear, my favorite polar bear, worldwide favorite polar bear, David White. He's up next. I'll see you tomorrow, 9 o'clock show. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.